Welcome back. You are tuned in to Traders Nation. Thanks for staying with us. I'm pleased to have back with us once again Sean Brodrick. Sean, welcome back to Traders Nation. How are you today?
Always good to talk to you. I'm doing pretty well.
Good, good. Goldilocks and the dollar bear. What's going on with that?
Well, this is a column that I wrote. It's turning out to hit at the right time. Just talking about we are having a bear market in the U.S. dollar.
Yeah.
And that's a market everyone should be aware of because it affects everybody. If you have U.S. dollars in your wallet's in a bear market.
Yeah.
And so we haven't seen inflation come through yet, but I think that down the road, inflation could move in like leaps and bounds because this has been going on for quite some time.
Yeah.
And we've had our producers, those kinds of people, hold the line, absorb the cost rise as much as they can, but at some point they are really just going to pass it through,
yeah.
And that could be quite the shock for all the consumers, you know.
Right.
And that, and also speaking about how for a European investor, investing in U.S. Securities has been a losing bet for like the last 6 years, simply because their currency is rising so much. Their returns, like in the Dow, seem to be much, much lower.
The only thing we can really get out of that is tourism for Europe. Is that correct? I mean, because they can spend a lot more over here. Their dollar or their euro goes stronger. You know, they can buy more stuff when they land on the U.S. soil with the euro, can't they?
Right. But
that's about the only.
There's also higher exports. But
yeah.
I mean, looking at it for the average U.S. consumer, it is going to hurt. And so,
sure.
you know.
All right, now the U.S. dollar index, which measures the greenback, by the way, I don't know, some people may or may not know that, against a basket of world currencies, okay, was down more than 36% from peak in 2001. So let's put this into perspective, okay? If we were to take $100 $1 bills out of the bank right now, we're basically, you walk out of the bank, you're throwing right into the trash $36. Is that correct?
Actually, that was as of Friday. Right now, you'd be throwing about 40 of them into the trash.
So yeah. we're down a slippery road of not in the wrong direction.
Yeah, I mean, and so even though it seems like when you invest in the U.S. market, you're actually doing okay. You're actually having pretty good returns, maybe because you're a smart investor and you invest in the right things. On a global scale,
yeah.
You're actually losing purchasing power against other investors around the world. And so that's why I think it's very important to invest beyond the U.S. borders.
All right, let's talk about traders. Are they making a big mistake by ignoring some problems that we're starting to see, rising foreclosures and potential inflationary concerns? Are traders missing?
Yeah. I mean, we've heard pretty much that, like, you know, we've heard about a pretty good economy being helped out by like this and that, but
jobs.
There is a recession in the U.S. housing market,
okay,
and it is spreading, and it's like one pin falling after another. First, it's the home builders, then it's the realtors, then it's everyone who works at like any kind of a financial institution,
sure.
And it just gets worse and worse and worse. So I think people have to be aware of it, and that's another reason to invest again overseas, because there are stronger economies.
Right.
And it used to be that everything was hooked to the U.S. economy so closely. When like we went down, everyone else really went down.
Yeah, but now they're disenfranchised from the U.S. economy. Like they're pulling back from that. Sean, we're out of time. Sean Brodrick, where can we find you?
Oh, you can find me at moneyandmarkets.com.
Head on over there today, moneyandmarkets.com. Sean Brodrick, thanks for being on Traders Nation. We'll be right back.